Thank you very much. Happy to be up here on stage for my second time this conference. Once they bar the doors, I'll tell you this is a zinc company. Obviously, everyone's here at a precious metals conference, so maybe this is not what you initially thought you'd hear about. But we do have silver credits, and we are looking at copper gold in a second project. But I kind of want to take a step back here and talk about the recent history of Tinka and myself and how I got into this company. So for those of you who know me, I was the founding CEO of Fireweed Metals 8 years ago. Took that company from 8-odd million, handed it off to the Lundins, and it's now a $650 million company. During that time, looked at a lot of zinc projects. Tinka was always our closest peer. It was always the company that we tended to point to on the valuation charts, because for a long time we fought to get a fair valuation at Fireweed. We eventually got it. You know, we dragged ourselves up, and the company is a fantastic success, for which I am grateful as a shareholder. But post Fireweed, looking for opportunities of what to do next, and I took my time. I took over a year to sort of figure out what exactly I was going to be spending my time on. I was looking at a situation emerge with Tinka that became increasingly intriguing. I am an absolute glutton for deep value. I recognize that in this industry, deep value tends to appear when there's some sort of dislocation, when there's something that needs addressing with a company. And I tend to think that if I'm going to get involved with a company, I'm going to help them address this dislocation, help them take from deep value to a great price. You have to recognize whether you are uniquely qualified or specifically qualified to address that dislocation. So the big challenge with Tinka emerging earlier this year, or starting late last year and coming into this year, certainly in the middle of the year, was they had a private equity investor owning about 17%, who was at the end of their fund life and chose to liquidate in the market and was not terribly cooperative in terms of crosses, et cetera. It was not a large part of their fund, I guess, and they were indifferent to the price they achieved. And so they effectively took the Tinka share price and cut it down to, I think it was at the bottom 1/8 of what it was, this time last year. When I saw that happen, it was already an attractive valuation, but at 1/8 that, it went to a whole new level. The challenge, so how do I restore that value? How do we claw that back? They had lost the confidence of the capital markets, and perhaps they were a touch directionless. So in a first for my career, a friend of mine and I, Michael Horner, who you may know, he was CFO of Adriatic Metals before the purchase by Dundee Precious. He had also done due diligence on most zinc assets globally and recognized the quality of the Ayawilca project in Tinka. We secured some backers, some of the largest shareholders from Fireweed and Adriatic. We wrote a letter to the Tinka board and said, look, we'd like to get involved. We have at least 10 million for you. These are the conditions of our involvement. And they agreed. We've basically doubled since that's happened. And I want to explain a little bit. Even with that doubling, we are still not at a 12-month high, even with the massively improved market conditions. So that continues to represent the deep value in this project. Last week, or maybe the week before, I purchased another bunch of shares on the market and was quite happy to, considering the value here. And this was the financing that we recapitalized them was the largest check I have ever written. So this is the management team. Graham Carman remains CEO. He is an excellent explorationist. He recognized perhaps a bit of a blind spot in the capital markets, and with me as exec chair, this is not just chair, this is exec chair, right? So I'm involved day to day. It's not just about talking to Graham on a daily basis. This is about being actively involved in capital markets and making sure that we restore the value that this company is owed. And really why we see the value there is, this is a part of Peru. We tend to in this industry, just to rewind, we tend in this industry to get a little grade blind or size blind or whatever blind as retail investors or funds. We think, okay, well, hot drill holes equals great project. And as I'll show later, Ayawilca can produce some amazing drill holes. But there's so much more to it than that. Ayawilca is 200 odd kilometers from a port, about a similar distance from a zinc smelter owned by one of our largest shareholders. Those are paved roads. It is a good part of Peru. If you don't believe me, we'll sign new community agreements in the next 8 months, I'm sure of it, right? So if you feel the need to be patient and wait for that, watch it get done. There are numerous mines around us, including about 100 kilometers to the north, the massive Antamina deposit or mine. We see in terms of challenges to a project, yeah, you have to look at the deposit size and grade, but you have to consider, okay, do I have access to power? And yes, we do. We have a substation 5 kilometers from the project where we already have the power rights. Do we have roads? Yes, we do. Does the deposit have a good geometry? Yes, it does. Does the deposit have problematic metallurgy? No, it doesn't. Is there water issues? No, there's not, because 2/3 of the deposit sits above the water table. So you think about buildability, and we look at the success that Michael had and his team and the founders of Adriatic, and we think about that getting out of that junior mining mentality of size obsession, right? Like if I just get it big enough, someone will buy me. And maybe think about, well, God forbid, put on your big boy pants and build it, advance it. The same steps that go towards building a project are the steps that de-risk it for M&A. So the two key projects of the company, and really Ayawilca is the key one, they are contiguous. Ayawilca you can see in the bottom right there. Silvia, a new project which we're actually actively drilling right now, is a potential copper gold skarn to the northwest. So Ayawilca, one of the largest undeveloped zinc deposits in the world. Significant amount of zinc, significant amount of silver. Interestingly, a separate but quite close, contiguous tin zone that is one of the largest tin deposits in the world, mostly because there isn't a significant amount of tin deposits in the world. So if you've got your eye on tin, certainly very interesting. The 2024 PEA, healthy economics, but one of the things that we looked at when we got involved was that we really felt that this study was kind of a NPV maximalist approach, like how do we get the biggest NPV possible? Look, that's certainly a way to drive value, but you have to also think about buildability, time to production, how much money do I have to get to that? Because an NPV only tells you what the NPV is at FID, like at final investment decision. It doesn't tell you right now how much money do I have to spend to get to FID. So if you're trying to maximize your NAV per share right now, an NPV maximalist approach may actually be value destructive. So we're taking a step back right now, and we're looking to simplify the mine plan, simplify the construction, likely scope it a little bit smaller, and you have something that we can get to a final investment decision sooner, and something that will ultimately drive more value for shareholders right now. Okay, I don't think this was supposed to be here. I must have accidentally inserted this in the middle. This is the chart, so you can see that we're not even at a 12-month high. This is the mineral resource. And the key thing we're going to focus on here is the west and south zones. There are some fantastic drill intersections I'll show you on the next slide. But when we look at these drill intersections, and when anyone looks at a series of high-grade drill intersections, that are particularly if they're much higher than the average grade, you ask yourself, well, are they kind of scattered around? Do I have one there? Do I have one there? Do I have one back here? And if they aren't contiguous, is that meaningful, right? Can you develop a mine plan that exploits exclusively high grade? So we recut the resource before we invested and really identified that there was a high grade core here, both in west and south, that we could look at to scope in a smaller high grade mine plan. Potentially also with maybe a toll milling arrangement or something. It doesn't have to be the biggest greenfield project you can build. And those high-grade intersections, when this project, gives high-grade intersections, it gives high-grade intersections. 40 meters of 20% zinc, 145 meters of 10.9% zinc. There are some tremendous high-grade intervals here that are at times basically pure sphalerite, pure zinc sulfide. This is a coarse grain system. It's the sort of system that is much easier to process than so many of the other large zinc deposits in the world. So we really saw how this was an opportunity to develop something and not just be a perpetual explorer. But not to rest on our laurels, the Silvia project, also owned by Tinka, this was an interesting acquisition in 2021. So BHP had generated a bunch of targets in and around and to the south of Antamina, looking for the next Antamina. Of course, that is an absolute beast of a mine. But they decided to pull out completely of exploration in Peru, and a lot of their portfolio was available. So Tinka at the time acquired this project for basically paying the price to renew it for the year and issuing a 1% NSR for BHP. So pretty much peanuts. The subsequent exploration that built on the regional geophysics and exploration that BHP did, amongst other things, identified 3 interesting zones, which I'll take a look at quickly, but also showed this area A, which you can see, where you have a very meaningful outcrop of skarn mineralization that is significantly mineralized. And so we understand, across this project that this is to find a project in Peru, particularly in a prime mineral belt that hosts these giant deposits that has outcropping mineralization that has never been drilled, is a unique thing. This is a excellent exploration project for any junior, and for us, it does not contribute to any of our value yet. And we know that exploration is tough. So many, you'll talk to lots of companies here that buy projects that are orphaned, which is what Firebee did. We bought a project that was orphaned and we built upon it. So being the first to drill something is daunting because you don't know a lot about it. It is wonderful to look at high-grade outcrop. It is an entirely different thing to have a cohesive 3D model to start to vector from. But we do know this has 3 excellent target areas, outcropping mineralization. We know there's a buried porphyry, causative porphyry in here that may or may not be mineralized. We know that there's a lot of geophysics and work to be done here to firm up these targets, but the outcrops in Area A just proved a little bit too tempting for us. So we went in there and are drilling it actively. So now this is, you can see here, particularly in the deep purple, the outcropping skarn mineralization. Most of this is undercover, like scree, loose rocks, so you're not able to see a lot of the outcrop. But where the skarn outcrops here, you are getting some very interesting intervals. You do get the occasional high-grade gram sample, including plus 1 ounce gold. But the most interesting result was a 46-meter trench that returned 1.9 grams gold and 0.8% copper. Look, if you can return that in a drill hole, that's a pretty fantastic outcome. Now, we understand there's geologic complexity here. We can see it from one trench to the next. And we understand that there's a whole lot of reasons, geological, et cetera, that a drill hole might not exactly mirror a trench. However, this is a pretty exciting thing to follow up on. So this is actively happening right now. We would expect our first drill results from Silvia December, I hope. It certainly seems like there's no lab constraints right now. And that's, that this is a freebie for us. If this doesn't hit, this is not our core project. We're building value on the back of Ayawilca. So this is a total free option for us that we hope to get a good hit on. If not, we'll certainly be following up in the spring anyways for geophysics to get a better sense of the project. So, to kind of review, recap, this took me a year to decide what new project I was going to kind of get involved in. I swore I wasn't going to do zinc. It's not always the easiest thing to market. But this project was too compelling. The situation, the special situation in terms of high quality project and artificially suppressed price was way too tempting with Tinka. So I'm executive chair here. This represents a significant amount of my time and effort. We are going to continue to de-risk, advance, and grow the Ayawilca zinc deposit. Look to tighten that up, make it a little more capital efficient, and hopefully get to an FID in the next 3-4 years. We're looking for a discovery at Silvia. And I think thanks to this recent $14 million we brought in, we have some very meaningful funds who backstop us here, who we know eliminate or vastly reduce the vast majority of financing risk as we go forward. So thank you very much. It's the end of the show, so it's hard to follow up with me on this, but please do email to info@Tinka Resources if you want to set up a call, or perhaps corner me over drinks or something if you have a quick question. Thank you very much.
Thank you, Brandon.
Hey, maybe do we have one question or?
Well, I would like to say that those grades, the zinc grades, very, very high grades.
Yeah.
When you're talking north of plus 20%, very rare to find in the world, let alone say in a good jurisdiction like Peru. So something you should reiterate more often.
Yep.
I do say is those grades are very high grade.
Yep.
Okay. Well, thank you, Brandon.
Thank you very much.
Yes.